All right, let's begin then by putting the spotlight on Tracxn's latest quarterly report, and that talks a little bit more about how funding after 3 consecutive quarters has seen a drop this time around. Which are some of the sectors that are likely to see funding interest down the line? What about the unicorns that have been created in the past few months? Let's get in Sharad to decode the data for us. Sharad.
Well, it's a very interesting trade. The first quarter of calendar year 2024, if you look at it, the funding has come down and it's down almost 51%, coming at $1.6 billion. Now, as per a report by Tracxn, India still ranks fourth biggest market when it comes to the funding, but there is a slowdown. Of course, there was 3 straight quarters of growth which was coming in, but the late stage funding, that has seen the biggest drop. Certain segments are there, so like your retail segment, the Fintech segment, that has performed really well, but the number of IPOs, if you look at it, that has gone almost 4 times on a year-on-year basis. And do remember, importantly, fast exits are also happening. So a lot of startups, especially which have not gone for Series C and Series D, they are also exiting via IPOs, and 2 new unicorns have come up. Of course, last year there weren't much unicorns, so 2 big names coming up, Perfios and Kritrim. Now let's look at the quarter, how the trend has happened. And if you look at it, there has been a 3 straight growth of quarters coming in, but now there has been a limitation coming in the first quarter. Of course, the number of funding rounds also has come down, and also the total fundraise. Now let's look at the top funding rounds, which of the startups have actually been there, where a very strong movement has happened, and the most heavily funded startups are your Capillary, as well as importantly, if you look at it, the larger names coming in, they include Credit Sasson, as well as Shadowfax as well.
And in fact, I want to take that conversation further. Thanks, Sharad, for that. We've got Neha Singh, she's the co-founder of Tracxn, joining in to talk a little bit more about the insights from that report. Neha, pleasure having you with us on Startup Central. Let's talk about the first point that the report highlights, the fact that there has been a drop in funding after 3 consecutive quarters of a rise. What exactly is the trend that you guys are foreseeing?
So thanks a lot for having me. So that is correct that if you look at Q1 of the current calendar year, India received a little over $1.6 billion of funding, which is a drop both on a year-on-year basis if you compare to Q1 of the last year, as well as sequential Q4 of the last year. This is in line with the global trend. So if you look at the funding trends globally, this is a similar trend that you also see across the key countries. So I think the broad-based recovery, which is there from the funding winter, is still awaited. But there are still some green shoots that you see across different segments. To give you one example, is the early stage funding is actually increased. So the early stage funding is back to the last level. In fact, if you look at the sequential Q1Q funding, that has increased in terms of the number of rounds as well as the dollar deployed in the early stage. Right, so that is very healthy. Second, if you look at Q1, it saw 2 new unicorns that got created. If you compare it to the pace last year, in the entire 4 quarters, there were only 2 new unicorn rounds. So if you look at the current pace, it's much higher than last year. So I think that is also very encouraging. And hopefully, I think the other trend which is also there, you see a lot more late stage investors talk about increase that they will become more active towards the second half of this financial year. And there are some leading indicators as well for that, like you see more IPO activity in the funded universe. So you saw companies file their DRHP, for instance, Ola Electric, as well as a lot more companies talk about their IPO plans in this calendar year. And as soon as that happens, the exits happen. It'll also increase, trickle down to the increased funding activity that you see in the late stage as well in the early stage. So the overall broad-based recovery from the funding winter is probably still awaited in terms of the numbers. But you see, but if you sense in terms of the sentiment as well as some of the other segments, I think you still see some green shoots coming.
Sure, and I understand that early, late, and seed stage funding, there have been certain drops and there has been a growth in some segments. Take us through what exactly the findings are.
Yeah, so interestingly, the early stage funding has increased on a sequential basis. So that's very encouraging. The late stage still continues to be fairly slow. In fact, it is down more than 40% if you compare on a year-on-year basis. So the late stage activity, the recovery in that segment is probably still awaited. The early stage is actually growing at a fairly good pace.
Which are some of the top performing sectors then, Neha, within which we are seeing a lot of traction in terms of funding, despite the fact that there has been a slowdown?
Right. So if you look at the top performing sectors, so one is your consumer retail, like you saw large rounds being raised by companies like a Shadowfax or a Capillary, etc. That's one segment which has seen large rounds. Second, I would say fintech. So fintech continues to be more agnostic towards the highs and lows in the overall funding environment. So you saw also large rounds happening in there, including companies like Porpheus, which also became a unicorn this year. Apart from that, enterprise applications B2B is one other segment which also saw some activity.
Sure. So do you think that fintech will continue to remain at the top, especially in light of the fact that we've seen so much smartphone penetration as well as a cashless economy and a lot of policies that are in favor of the fintech sector?
So fintech continues to be one of the sectors which has seen active interest from the investors. Despite the highs and lows on funding, and I think because of a lot of other things happening in the infrastructure layer in the fintech in India, right? You saw a lot of things happening in terms of the definitely the smartphone penetration, the UPI, etc. Right. So a lot of those things, and it continues to be RBI's new policy, which is both helpful as well as helping in regulating some of the fintech companies. So you see that, so that should continue to be one sector which continues to see investor interest.
And what about the unicorns that have been created already? We've seen about 2 new unicorns that have been created. How does that stack up with the kind of data that we witnessed last year? What's the trend that you see?
Yeah, so the current pace of the unicorn rounds is higher than last year, which is encouraging. And probably with more late stage funding expected to happen in the second half of this calendar year, you might see some recovery, at least in the terms of the number of new unicorns that get created this year in India.
Right, and Neha, which are some of the top funded cities in India?
So in terms of the city, the trend is actually similar to what we have seen across the last few quarters. So Bangalore continues to be the top funded city, followed by Mumbai and then Noida.
And how does, the Indian tech story really stack up versus the kind of progress that we've seen across the globe? Is there still a lot of catch up?
So India continues to be having a lot of investor interest. If you look at, both across the private markets as well as across the public markets, it's because of a lot of underlying matrices. For instance, like India is one of the fastest growing economies. If you talk to the consumers over here versus some of the other countries, people don't see recession as a likely impending thing to be happening this year. So you see fairly optimistic in terms of the consumer sentiment, and you also see consumer spend increasing. Right. So there are a lot of these underlying things which because of which investors are interested in investing in India, both across the private as well as the public space. And that is why you see a lot more in new investors also coming into India and investing, probably for the first time. So there, you see a good, healthy sort of interest.
All right, good to have you on board, Neha. Thanks for breaking that down for us. Let's get a move right on then.